We are back, man. Episode 2. Today's a very exciting day. We're gonna go through some things that I think are gonna be very helpful to the growth of your success. It has helped me a lot. I'm passing on the information to you, so I know what has worked for me will definitely work for you, right? Um, last episode, we went over a few things just to get you started. We went over just opening some accounts. I call them the arsenals because we'll be using those and the tools that they offer for us to be able to go through our trades and to pick the best trades, when to enter, when to exit, and to be able to move just fast, man, right? So before we start diving even deeper and deeper and deeper into this thing, I think it's best that we start to get an understanding of the new terminology, the new words that people in the stock market use, right? Like, if we're going to get real deep into this thing, we might as well learn the language that they speak too, right? So, first off, let's just get right into it. Let's dive into it. You know I don't like to give you all the extra talking. I just want you to just get straight into it. I was just giving you a brief of what it is that we're going to jump into. We're going to take this thing step by step. And we're going to get up to the top of the mountain, ladies and gentlemen. All right. So here, the first word. This one is pretty important. This is like what moves the whole stock market, I guess, in a sense. I can say it doesn't really move the stock market, but this is what you're actually going to be seeing throughout the transition from going up, going down, and you would see a bunch of these things, and they're called a doji, right? And a doji here is a name for a session in which the candlestick for security, which is also known as the underline, that has an open and closed point that are virtually equal and are often components and patterns, right? Doji candlesticks, the same thing, look like a cross, inverted crosses, or a plus sign, right? Alone, dojis are neutral patterns that are also featured in a number of important patterns. The candlestick also has a wide part known as the real body. Some analysis believe that a long wick or shadow means the stock will turn or reverse, and no wick means it's a definite action, right? So a doji, I want you to be able to see what a doji is, and here's what an actual doji is. Some terms that we haven't went over yet that you heard me say, and I'll just repeat it, is that, a doji and candlesticks are basically the same thing. A candlestick is formed inside of the doji, right? For the security, which is also known as the stock, also known as the underline. Same thing. So I want us to be able to understand these terminologies, so as we move on and we start talking and getting deeper and deeper into it, no one gets lost, right? So let's just move on with this one and see what I have here next. Okay, so here are the different types of doji candlesticks, right? Starting from the top left, you'll see that there's the standard doji. Top right, there's the long-legged doji. Moving on to the right, you have the dragonfly doji. At the bottom, you have the gravestone doji. And next, last but not least, we have the full price doji. I want you to look at these things and get real acquainted with these, because you will be seeing these as price action happen. And the better you're able to understand this and grasp the patterns, it's so easy for you to understand what is happening. So easy for you to understand what the candlesticks are telling you, because you're just going to be able to understand what it is that's going on here in the situation. So let's just break it down, right? Neutral doji is a small candlestick pattern that looks like a cross or a plus sign. This pattern occurs when the stock opens and closes in the middle of the day's high and low. Long leg doji, right? A long leg doji has the upper and lower shadows are much longer than the neutral doji. During any time frame of the candle, the price dramatically moves up and down but closed at the same level that it opened. This pattern forms when simply supply and demand forces are at equilibrium, and this shows the indecision between the buyers and the sellers. Gravestone doji. A gravestone doji is formed when the opening and closing price are equal and occur at the low of the day. This pattern forms when the supply and demand forces are at equilibrium. A dragonfly doji. A dragonfly doji is formed when the opening and closing prices are equal and occur at the high of the day. This form when the supply and demand forces are at equilibrium. Four price doji. Four price doji is simply a horizontal line without any upper and lower shadow. It looks like a minus sign, and the high, low, open, and close price of the candlestick are exactly the same. I want you to take your time, go over this, and understand this. This is first time going through these things and first time hearing this, but take your time to understand this is the action of these dojis, right? And what they mean. Take your time and go back over it, read it if you want to. So here's an example, looking at the left, right? You have a bullish candlestick in the green. Next, you have a bearish candlestick in the red, and you have a neutral. So in the in the bullish candlestick, we see the opening is less than the closing price, right? So where the wick starts is the high. Now, at the top of the green part of the candlestick is where it closes. Now, the bottom of the candlesticks is where it's actually open versus the bottom of the wick is the low. Now, if you understand the action of the candlestick is that the bearish action of it, the green part of the candlestick, is that it moves upward. So you notice at the bottom, the low price of the wick, the bottom of the wick is the low price. Then the bottom of the green part of the candlestick here, you would notice that this is where it actually opens. And as these orders come in, the action of the candlestick would move upward. It would have an upward momentum here, right? And this is where it would actually close off at. And the top of this wick here would be the highest peak of that action. So now looking over here at your bearish action, right? Just to give you an update. So a bullish action is an upward trend. A bearish action is a downward trend. Some say bulls attack upward and bears attack downward, right? It's just a thing for you to maybe remember the term between bullish and bearish, red versus green, right? So now looking over at the bearish candlestick, you would notice that the high of the wick shadow starts at the top. It opens, however, the candlestick of it, the full body, it opens here. Now the action of this candlestick goes down. So now we notice that it would close here is the closing point, but the actual lowest price range may be down here, right? Here's the opening and closing price to be equal. You may see a doji like this where it's just equal, right? There's nothing happening there. Bullish, we just kind of basically just went over bullish, but bullish action means that it's going up, right? I want to be able to give you some terms that you'll hear me say over and over a few times, and I just want us to be on the same page. So bullish means going up. A bull market is a market condition that means the stock prices are expected to rise. Bullish. Here's an example of some bullish dojis. Very important. Get used to these types of candlesticks. Familiarize yourself with it. Understand it, because once you see these candlesticks, you would know what is happening, when to enter and when to exit. So you notice the first candlestick to the left here is considered to be the most bullish. There's no shadow or no wick top or bottom, right? So most experts would say this is a definite action of a bullish trend, right? Second, we see sledgehammer type thing, the Thor hammer. Well, I don't know what Thor hammer was. I think he just called it a hammer, but we could just call him Thor. So this is the second most bullish candlestick that you would see, right? It has a long wick at the bottom. Sometimes I like to think of this long wick, this long shadow tail as a lever of how hard it's actually hitting. When I see that, and I think once I see that after something like a most bullish candle, I'm automatically thinking, oh yeah, we're definitely going up. This sledgehammer is about to wham, right? So that's just another theory that I think about, and it has been treating me very well. Next, you have a normal bullish. You have resistance at the top and resistance at the bottom, right? These lines let you basically know also where the resistance come in from. So as the motion of the candlestick loads upward in a bullish motion, you may get some resistance at the top here that stops it from not being a full candle here, right? Because here you have sellers that are stopping it. So you get this wick at the top here. This is from my observation, right? So this is normal. You know, you have your buyers and your sellers are almost even. But this, I would still, in my sense, consider this to say like, hey, you know what? This is still going in an upward trend, ladies and gentlemen. I'm going to keep my money in there. Now, once I start to see motions like this neutral bullish mark here, start to think, hey, you know, now it may be a time for me to start thinking about, this thing may take a change pretty soon, right? But it's still in an upward trend. You may see a neutral, you would see doji at the top, doji at the bottom, but you notice the candlestick is so small, right? Now, remember, the action of this candlestick would be building up. So if it's not filled all the way up, there this is showing me that the amount of sellers are just as great as the amount of buyers, but it's coming so close in that it's not really gonna be pushing it as strong as a most bullish or second most bullish candlestick would. Once I see an upside down Thor, we know this is the least bullish. So now what this is showing me that in the sense that this candle wants to push all the way up for its growth to keep the upward momentum trend, it's struggling to do so because the wick or the shadow is so strong, which is showing me that all these sellers here are pushing against it. So once I start to see this, so we know like, hey, it may be time to start thinking about getting rid of that bad boy, because you got to remember, we in here to get in and get out, right? Bearish. Sorry, let me just see if I can go back a bit here for you. Right. So bearish. The bearish action means that it's going down, right? A bear market is one in which investors expect stock prices to fall. This is where short sellers shine. Trust me, you can make a lot of money knowing that the price is going down. Yes, I said that. And in fact, I personally love to put in my options for when the price go down, because it's more, to me, in a sense, it's more of a guaranteed thing. I guess mostly because I'm a short seller. I'm in and I'm out, right? But you can play both ways as it go up and come down. But bearish, you can make a lot of money as the stock goes down, right? I want to give you examples of bearish candlesticks, right? So just as much as the bullish candlesticks, it's the same layout here. The only difference is, what you notice is that the second most bearish candlestick is actually an upside down Thor hammer. And why is that, right? That's because, remember, as the candlestick is shooting downward with a downward trend, we notice that down here there's no wick, there's no wick or resistance that's actually pushing that up and stopping it from going down. So this is the second most bearish trend from next to a full candlestick with no wicks at the top or the bottom of it. Again, here, now this is a normal bearish. It's still going downward, right? You have resistance at the top and you have a little bit of resistance at the bottom, but it's still enough to continue that momentum in that specific direction. Here's a neutral bearish. We went over that already, just as much in the neutral bullish, but I want you to be able to understand that the resistance at the bottom now, because remember, the motion of this candlestick here will be momentum and down. It will be a downward action as it loads, but the bottom here shows the resistance of the buyers, and it also shows the strength of the sellers, to where now it comes to an equal playing ground here, right? But that shows that the buyers, the motion of it definitely may take a swing. This, however, next, the upward Thor, the upward hammer, shows the least bearish for a bearish action. And why is that? Now, we notice that all of the action here is filled at the top. Now, remember, the bearish movement of the candlestick loads downward, but you see this wick here, the shadow is so long. These are all the buyers that are resistant against this candlestick pushing downward, right? And this is why this will be the least bearish. Once you see that, you know It's about to take a turn, right? So let's keep on moving, right? Volatility. These are some other terms I want you to get acquainted with. Volatility is simply how fast the stock moves up and down. You may see some stocks, you may look into it and you can see the growth pattern of them. They may go up and down in a few days. Some within a day may have a volatility that may range from a few pennies. Some may have volatility that range in a few dollars within a day. For us, it's great to find stocks with a lot of volatility because that just means more money in a shorter period of time for us once we're able to understand when to enter and when to exit. Bid-ask spread. Now, a bid-ask spread is the difference between what people have to spend and what people want to get. The spread must be resolved before the transaction can take place. So we would dive even deeper into a bid-ask spread once we get going with options trading. That would be for a later episode where I'll be able to tell you that the bid are for buyers and the asks are for sellers. And when they come together, the buyers have a price that they want to buy the share at versus the sellers have their price that they want to sell it at. So sometimes there's a difference between those prices, and that difference in the middle of it is the actual spread. What the stock market does is find a middle ground within that spread and say, okay, let's figure a number between that best serves the seller and serves the buyer, right? And the stock market gets their piece of the pie for selling it and making the connection and the business happen. We want to stay away from big, wide spreads, though, right? We will dive deeper into that future episodes. Just want to be able to take our time and understand the new terminology that we're getting here, that we're going to keep using as we move on and as we grow. Volume. Trading volume is the number of shares being traded each day, a factor that's a huge implication for stock liquidity, right? Some people say the volume happens before the price action happens, right? If we're seeing a lot of volume going on and it happens to be bullish, then it's most likely that it will be going in an upward trend. If the volume happens to be a lot and it's in the red going for a bearish act, then it may go in a downward trend, right? Let's lead into why not liquidity, right? Is how easily you can get into a stock, right? How easy is it for you to get in and out of a stock? Now, sometimes the things are moving so fast, especially with Robinhood. I'm going to give you a heads up that so much volume is happening, so much liquidity is moving around that you're trying to place an order and you want to get in at a great price range that you know, like, hey, now is the time to get in or now is the time to get out. That sometimes it does hinder you from actually purchasing that. So you may have to find a lower price or a higher price that you want to buy or sell at, so that you don't get caught up in the rapture or the confusion of all that action, or you can just simply just wait a little bit. The choice is yours to make, because most of the time once actions are happening like that, it's about a 90% that it may bounce and come right back to the number that you want to get it at. We'll get into that later. I just wanted to give you a heads up. Okay. Blue chip stocks, man. These are large industry leading companies offering stable dividend payments. Dividends are basically companies pay you a portion of the profits for investing in the company. And it's just another strategy to be able to keep you tied in to their company as they grow. You know, you want people behind you, you want their people money, so they figure, hey, let's pay these people. And why not? If you're invested in a company, why not? Shouldn't you get dividends? Right? These are blue chip companies that, hey, maybe you might like Apple, right? And Apple is growing. You don't want to pull out your money in Apple, and you're gonna get paid some dividends because Apple is a blue chip stock, right? For an example, retracement versus reversals. This is a huge part that we would get into once we start looking at the movement of these candlesticks, understanding these dojis, and throughout the day, knowing when to enter, when to exit based on retracements versus reversals. This separates the people that when they get scared, they just start to sell, or this separates the real traders, right? When you're able to tell that, hey, this is not a reversal, this is just a retracement, so it's no need to panic, right? So what a retracement is, they're temporary price reversals that take place within a larger trend. So the trend may be moving upward, or the trend even may be going downward, right? And a retracement may possibly, let's just imagine that the trend is that it's going upward, right? The price may go down a little bit and then come back up, and then the trend still moves up, right? Some people may get so afraid as soon as they see it drop down that they sell, but technically that's just a retracement, and the momentum of the trend is actually still going upward. So if you stay in, you would make more money by understanding when the retracement is versus a reversal. A reversal is when the trend changes complete direction. With a reversal, the price is likely to continue in that direction for an extended period. So we're talking about a complete change in direction. It's not just a small dip and continue going up. Let me give you an example here. So you can see here the overall trend of this stock here is moving in an upward, right? These little dips here are retracements. These little down and ups are retracements, but for the most part, the whole thing, the price is actually going up. Now, this right here, this complete dip down here is not a retracement. This is not a retracement. This is what you call a complete reversal, because it's reversing the complete direction, right? So we have to be able to understand the difference between a retracement versus a reversal, so we don't get scared and decide to sell when we see a retracement, and make more money in the fact following the trend and not panic at all, versus when we do see a reversal and we understand that, hey, you know what, this is an actual reversal here. What I'm gonna do is I'm gonna finally sell at this reversal point, and guess what, I'm gonna make a call on it going down, and I'm gonna ride that thing going down a reversal and make money. Yes, ladies and gentlemen, we'll get into that also, how you can make money going downward. But now I want you to just focus on these key terms, and understand the patterns and get used to them. Familiarize yourself with them very well. Again, we'll get into more on the next episode. I don't want to kill you on each episode. I don't want to overload you. Take your time and go back through this. Understand these words, these new languages, because we will be going through those more and more. For the next episode, I will break down how we're going to be able to use our arsenal tools, and understand those movements with those candlesticks and those dojis, those reversals, those retracements, and we'll be able to pinpoint when to move what is what by using the tools from our Fidelity, Robinhood, and our Active Trader Pro. All right. And once again, check out my merchandise, clothes. You want some fresh gear, man? Get right. It's winning season. Remember, we here to be blessed, make this money, and live life to the fullest experience.
Even the sun can't block your shine. I need all you. I swear you're one in a million. You're the best. And this is even why the sun can't block your shine. Nobody can compare to your life. Nobody can compare to your life. I search around the world, but nothing's like you. I had a couple, but that love wasn't true. Tore with my heart, left my soul feeling bruised. Since you came in my view, show me what love do.